Good day, all. Ira Epstein of Linn Associates with your agriculture update for this important Tuesday, and we're on now the 4th of June, 2019. Well, we're in the evening session, which means we're already into Wednesday's trade. It's the reason we're a bit dark behind me in these markets. They'll populate at 7 tonight when the markets reopen. In the meantime, stock indices have been on a tear, second biggest day of the year in terms of an up move. If you take a look, you've even got the metals moving up. Currency's a mixed blessing. So what's been going on is we're trying to figure out where the U.S. is with Mexico. Tomorrow we'll get a much better idea as to whether or not those tariffs are going to go in place or not, because the Mexican delegation is supposedly ready to make some proposals. Republicans are balking at the U.S., and I've said Republicans, wasn't a slip of word, balking at the idea of putting tariffs on our close neighbor like that. So we'll see what happens, but there's pressure coming on to the president. On the weekly area chart of just closes, you can see where the 18-week moving average of closes is. It's right here at 876.5. The market's about 5 cents over it. We're in what I'll call a resistance area on the chart. When we take a look at July beans on a daily chart, just like I pointed out yesterday, you have your first gap and a second gap. So what you have is two gaps that either they get filled or you create another gap, which is called a runaway gap. I don't see that at this point. I see the market trying to figure out what to do from right here, and weather is going to play the big key in this. You know, every night that we turn on the TV, we're seeing that these fields are underwater, rail system. We had a meeting here today. How much are the railroads being impacted by this? And we're hearing dramatically. Be it on the far west where snow suddenly fell in the mountains, or we're going through the center of the country where I'm guessing there's a lot of rails underwater there and the trains probably don't find it safe to move. So that becomes a problem. We saw today that ADM said that Smithfield, the big Chinese meat packer, yeah, they're in the U.S., but China bought them. They're bringing in a lot of corn from Brazil. They're bringing it in from other countries in South America. But in our meeting in the office, it was explained to me, it doesn't matter. They could only bring in about 200 million bushels or so. It's an unloading facility problem that you've got, and you've got to consider that at all times. It's almost like, hey, how do I get the basis levels down in some areas because I'm going to bring in that grain? But how do you unload it all? And that becomes a big question. When we take a look, we still have a pattern here of higher lows and higher highs at work. This level of the uptrend, I would say, would pause at a minimum. Should you take out 873.5, it would break the pattern of higher lows, higher highs, which has gone on since right about here when the market was just about 816 or so. In terms of resistance, we're narrowing in to the $9 level, which is the 100-day moving average of closes, and the upper Bollinger Band, which you've gotten over, but which keeps throwing the market back. Yes, the market's been able to work higher on it. I'm the first to even say that, but it gets restrained by it. You had that big surge, then you started pulling back. And if you think of the high you made here, you really haven't gone that much higher. It's a market that when I look at the momentum here, the question is, are we overbought, or is this market going to turn around and embed on you and then create something else? Both numbers were over 80 today, yesterday, but not the day before. I view tomorrow as a very important day. I would not be surprised if the weather has got a bit of a hole in it where there's not as much rain that we start in a corrective mode. Not a bear mode, a corrective mode. There's a difference. When you look at meal, you've got the pattern of higher lows, higher highs. That's an uptrend. Should this market take out 319.60, what could happen in the market then is possibly making a move back down to the 100-day average, the closest of the averages. The market, like beans, had gotten that surge up on that terrible weather, and now it's been distributing sideways since the peak of 328.10 4 days ago. Well, it was the fourth day ago. You've really gone nowhere. The market just sort of meandering right here. In terms of stochastics, both numbers today are over 80. Both were over 80 yesterday and the day before. That's called an embedded reading. But when you close near the bottom of a range and you're knocking on the door of losing that reading, be careful tonight. Without a good weather forecast, that could quickly drop down under 80 and carry with it momentum back to the downside. I would have preferred, if this market to be bullish, be in the top 50% of the range, not the bottom third. In soybean oil, you've got a mixed picture here. You've got the trend is defined by the swing line with lower highs, lower lows down, but the market refuses to stay under the 18-day average, so the bias is up. What that does is put the market sideways. It's gone nowhere right here. I would expect to see a battle at the 18-day average. Momentum is trying to say that prices want to come down a little bit. In the corn market, here too, I've got a problem in that if this market starts down, you're going to lose that embedded reading. Do I think it's going to? It's not what I think. It's a question of higher lows, which you've got, and suddenly the market might be, again, just like in the beans, going sideways, unable to go that next route. Give it another weather jolt, bring in more bad weather, away you go. This is how weather markets act. They're not easy to trade. And it's not a question of getting bearish on this market. The most it can do is step out of its uptrend. There's nothing here that is bearish. The question is, does this market form a vacuum if everybody goes for the same door at the same time? I don't know. What I do know is there's a lot of corn that's been lost, a lot of acreage is lost, and nothing immediately looks to be changing that dramatically. The market that's got more of a problem seems to be wheat. First of all, it's a key reversal down. Key reversal means you've made the highest high of a move. You did that today. You closed under the opener. You did that. And you closed under the previous day, which you did in all steps and took out, of course, that previous day's low. Now, to put the nail in the coffin, if the slow stochastic were to come down, then I would argue this market's ready to get back and maybe challenge key support at these two moving averages. I'm looking also at the 18-day average because it seems to be jumping right now, as you can see, almost about 4 or 5 cents a day. That means tomorrow it's going to be very close to that 100-day average. Should be an interesting trading day in that market. In the sugar market, I see an overbought market that's over the upper Bollinger Band. If it were to surge, maybe it can get to the 100-day average. It's more likely to get a pullback into the Bollinger Band only because 95% of the time the markets will trade within the bands, not outside of them. What I do see is a market that's got a rounded bottom right here, and that's a sign that this market got overdone to the downside. In the coffee market, you keep running into the upper Bollinger Band and not backing away from it. That's not a bearish sign in any manner. It hasn't taken out a previous low. The support we saw was tested at the 100-day average once, and it continues to move forward. Weather in different parts of Brazil and so on are questionable for the crop, and this market broke out of sideways action, lifted up, and the question is, when does it stop? I would think that the slow stochastic will call that before price calls it, and it's not calling it yet. In the cocoa market, if we take a look at what happened here, when this market broke through this 2392 area, you broke the pattern of higher lows, higher highs. That was yesterday. The next stop now, if the market wants to decline, and you don't know, is possibly support at the 100-day average with resistance back up at the 18-day average. You went down today. Just take a look. You went down first, got to the 100, you tell me the number you're rallying back up to. You're in a neutral market, but it doesn't act like it has legs to the downside just yet. In the cotton market, I don't see a trend. I see a market that's bringing in the Bollinger Bands. In other words, volatility coming out of the market right here as it tries to figure out what it's going to do next. It's overbought. Don't know if it'll have any follow through. In the cattle market, you had a couple of days, 3 of them under the lower band, Bollinger Band, and you're moving to the right-hand side. That's not a trend change. It is a market that is oversold. You've hit your downside targets, but what's going to lift it? I don't know. You've got lower highs, lower lows, still bearish. I think the pros took some money off the table up here, not down here, and I think now the market just sort of languishing. In the feeder cattle market, You're trying to turn the momentum back up. If so, resistance waits for this market at, I think, the 18-day average of closes. The trend is down. This was a heck of a move to the downside. The bounce can be somewhat muted because you are in a downtrend, but I look at that momentum. It never did embed. It just got oversold, and it's a bounce at this point. In the hog market, I don't see a trend. I see a higher high, lower low, riding the lower band in an oversold market. Very, very difficult. You know, I know a lot of you like to trade in the in the metal markets, and I spent today doing a rather lengthy video on gold if you're interested in that. And what I did is I covered the seasonal charts for you. I did it in the cash market on the seasonals. I went through a study here that showed, it's too bad it's gone, the 15, the 30, and the 5-year patterns, and I explained why I have questions about the 5 and the 15-year pattern, given that we had a stock market that just ran in one direction to the upside. Then I go into the weekly charts and the daily charts and try to give you some ideas. If you'd like to see it, all you need to do is go to our website. Under the word education, you'll see Metal Report. Click it, away you go. I'm Ira Epstein. You have a good day. I'll see you tomorrow.